The S&P 500 index has had a strong year in 2024, relatively strong year. It's up over 19.6% year to date as of December 1st. Thankfully, my pick of top growth stocks, my selection of top growth stocks has outperformed the S&P 500 index. I'll share with you in this video precisely by how much. I'm also going to share with you my updated list of top growth stocks to buy. You're not going to want to miss. I'm making a change in this month's selections. I'm removing one stock from that list of top growth stocks to buy that I update every month as I have in 2024. So I'll share with you my performance of my picks year to date, and I'll update those picks and let you know which one I'm removing and share with you my selection of top growth stocks to buy right now while we're still in 2024. Let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so last month when I updated my list of top growth stocks to buy, I shared with you that these were my top growth stocks. Nvidia, which is up 179%, Chewy, which is up over 41%, Amazon, Snap, which is the only stock on this list that's down, and it's down over 30% year to date, Fiverr, Uber Technologies, Alphabet, Salesforce. So I shared with you that these 1, 2, 3, 4, 5, 6, 7, 8 growth stocks were on my list of top growth stocks to buy. Their performance year to date has been exceptional, and I'm really happy with the performance of the list overall. Of course, I'm not happy with how Snap has performed, but with the list overall, I'm happy with the performance. Now, the one stock I'm going to remove from this list this month is Salesforce. So I'm removing Salesforce stock from the list. It's up over 25% year to date, a solid year to date return for Salesforce. And I feel that the valuation is now becoming stretched, and I'll share with you in the next slide all the valuations. And that's one of the reasons why I'm removing Salesforce from the list. So let me talk about valuations for these growth stocks, which is one of the main reasons why I'm rating these on my list of top stocks to buy. You can see measuring by the forward price to earnings ratio that the valuations, the most expensive is Nvidia at a forward price to earnings of 31. Actually, I should say Amazon has surpassed Nvidia. It's now trading at a forward price to earnings closer to 34, which is the most expensive on the list. And you have a stock like Fiverr, which I think is ridiculously cheap at a forward price to earnings of 12. And Alphabet as well, which I think is very cheap at a forward price to earnings of 19. So these are companies where I feel have good competitive advantages, have good prospects in the near to medium to long term in terms of earnings per share and cash flow from operations. They operate in large and growing industries, and they're trading at relatively inexpensive valuations. So if you've read my book, The 6-Step Investing Framework, you'll get an understanding of the 6 factors I consider when making investment decisions. And these stocks here rank very well in that criteria. They score very high in that criteria of the framework that I use. One stock that I removed off the list last month was PayPal. PayPal was up 29% as of October 31st when I removed PayPal stock. I saw some things in PayPal's latest earnings report that I didn't quite like. And then on top of that, the stock price, it was already up 29% year to date. And the valuation was getting stretched from when I recommended it as a top stock to buy here in 2024. So I took PayPal off the list, but I included PayPal's results in my result performance for the portfolio year to date because it was in the portfolio all the way up until October 31st. Now I'm going to compare my results to the S&P 500, which is up over 19.6% year to date. So you can see how you would have performed if you just invested in the S&P 500 index, or if you selected my top growth stocks to buy as your portfolio construction methodology. So let's now take a look at how my portfolio overall performed against the S&P. All right, so here I have all the results as of December 1st, 2024. You can see NVIDIA, Chewy, Amazon, Salesforce, which I'm removing this month, and I'll type it here so that you don't miss out on that. Removing this month, Google, Fiverr, Uber, PayPal, which I removed last month, and Snap, which I'm still keeping, even though it's down 30% year to date. I still like the valuation and the prospects for Snap longer term. So my portfolio overall has returned a solid 37.71% year to date in 2024. A really strong return. I would be happy with that every single year from now until infinity. I would love a portfolio return of over 37%. Those are incredible returns. I don't expect to be able to replicate these kinds of returns in very many years. And I wouldn't be surprised if between now and the end of the year, the portfolio return isn't as strong as it is right now. This is, I believe, the strongest it's been all year in 2024. I've been tracking my results every month, and this is the strongest it's been all year long. Of course, with more time, you have more time to outperform because the companies deliver earnings and those earnings prospects improve and the valuations adjust according to the company's earnings. And so as time progresses, the outperformance can improve. And the S&P 500 delivered 19.64% year to date in 2024. So when you look at my portfolio against the S&P 500, I've outperformed it by over 18 percentage points year to date in 2024. A very strong outperformance, one that, again, I don't expect to replicate at this magnitude for very many months or for very many years. This is a incredibly strong outperformance. Now, I do expect to beat the S&P 500 by a meaningful margin, but I don't expect to beat it by this large of a magnitude. I've been saying all year long in the months where my portfolio has outperformed that you shouldn't expect this to continue for a very long time. If I could beat the S&P 500 by this magnitude, I probably wouldn't be making videos on YouTube. I'd probably be managing a portfolio worth millions, perhaps billions of dollars. And so this kind of outperformance, while it's great, right? I'm very happy. I'm pleased with this performance. And if you followed these recommendations and you've made money on these stocks, I'm very happy to hear about that. But I caution you not to expect this to continue. I caution you to continue to do your own due diligence and don't just follow my picks because you look at this performance and you say, well, Parkev is clearly a great investor, a great stock picker, and I can just follow his picks without doing my own due diligence. Do not do that, right? That's why I'm cautioning you not to take these results and just make the conclusion that you don't need to do your own due diligence and you can just follow my picks. This is a outlier performance for 1 year. And if I can do this for maybe 5 years, then you can maybe start to rely more on my selections and my recommendations. But 1 year, not enough data to support this kind of outperformance, right? So we can chalk this up to magnified outperformance that's not likely to repeat itself. Still, I like these stocks that I'm upgrading here. Well, not upgrading, but updating. I'm removing Salesforce. So now my top growth stocks to buy include NVIDIA, Chewy, Amazon, Google, Fiverr, Uber, and Snap. Those are my top stocks to buy right now in December. Top growth stocks to buy, I should say, right now in December. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.